Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We're just about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Katie Greifeld counting you down to the closing bell. Here to help take us beyond that bell. It's a global simulcast. Carol Massar, Paul Sweeney in for Tim Sternovic. And we go across platform, TV, radio, YouTube to dissect what is a pretty ugly day. No matter how you look at it, Carol, from a stock market perspective, we are down 3.8% in terms of your overall NASDAQ. And actually volume starting to rise on the Dow and the S&P.
Yeah, right. We're seeing that selling and that momentum, that volume really pick up as we are just a few minutes away from that closing bell. I'm looking at the S&P 500, Paul. There is nowhere to hide. Most names in that index are down today.
Yeah, nowhere to hide is exactly right. And, we saw it just kind of selling into the close, which gets my attention here with some conviction, it feels like. And so if Jay Powell wanted to send a message to the market, message received. Mm-hmm.
Indeed, it seemed like an equity market that maybe listened today, realized that there wasn't a pivot. Maybe we made that up and that they're firmly full steam ahead. It's a bond market, at least, that is still seeing a slight elevation on the front end. Katie, yields are still up about 2 to 5 basis points on 2s and 5s. But everywhere else, it sort of seems classic flight to safety.
Yeah, you are getting a bit of a bid into the long end. I'm looking at 30-year yields down about 4 basis points. So a little bit of an offset to that pain that we're seeing in the equity markets, but not by much.
Not by much. At the moment, we've really seen the pain trade accelerate from what was a hawkish ECB that then filtered in a bond market that backed up, certainly over in Europe, to then filter into a hawkish sentiment from a Federal Reserve. And of course, the issue came in the equities hard and fast.
Yeah, and when I look at the VIX right now, up 3 points, Caroline, going above 25. So some concerns and nervousness in the market.
Yeah, well, people trying to de-risk as we head towards this weekend. We're currently off by 141 points. S&P 500, the bell rings. Not much to cheer about on this day. We're off by 3.3%. So if you've been long the S&P, it's been a painful trade. And as we always say, only about six stocks in the green entirety of the S&P 500. The NASDAQ is off by 3.9%, so big tech on the downside and feeling the most pain. We're also seeing the Dow Jones off by some 3 percentage points. 1,000 points, Taylor, more than 1,000, 1,008
Thank you.
points
I love a good
down.
point count.
Yeah, you wanted us to really go there when it came to the Dow. And I'm looking at, really, the Russell 2000 off by 4%. It's kind of astounding overall, Carol.
Yeah, really, just across the board here. I'm looking at the S&P 500, the individual names in the index for the week overall. And of course, no surprise, guys, Taylor, those top performers for the week overall, all those energy names.
Yeah, you really actually don't see that, though, on the day, Carol, as we sort of focus in on where we are. For our radio audience, the sector winners, the sector losers, everything is in the red. Let's start with some, quote, the best performers, energy. To your point, Carol, you're still off the 1%. And then all the way down at the bottom, everything is off even 3 to 6%. Some of the worst performers, semiconductors, media and entertainment, tech, hardware. I mean, again, you're off at least 4% on all of those sectors.
All right, so let me get to some of the individual names. Fingers crossed that they're still in the green, and it looks like they are. So Electronic Arts, definitely off its highs of today in the pre-market, but still finishing up the day with about a gain of 3.6%. USA Today saying maybe Amazon is getting ready to do a bid, then walking it back. It was kind of back and forth. We talked with our Molly Schutz. This is a name that is often talked about as a takeover target, but nonetheless, one of the names rallying in today's session. Workday, we talked about their results reported last night. That stock finishing with about a 2.5% gain. It was up as much as 10% earlier in the trade. Application software company, second quarter results that beat, reiterated its forecast for the year. And one name, I think, Katie, you talked about it earlier, Molina Health, ticker is MOH. This stock up about 3.4% in today's trade. California intending to award it a contract, a Medi-Cal contract, and this is one of the 3 managed care companies that seem to be getting some of the business from the company. I mean, not from the company, from the state. So nonetheless, Paul, we saw some gains in that name in today's trade.
I had a lot more to choose from. The easier assignment today. Decliner shares of NVIDIA continue to trade lower on signs of chip weakness across the sector. Katie called this out the last hour. Late Wednesday, the company gave a disappointing revenue outlook after already cutting revenue guidance earlier this month. Share home builders, including Lennar, trading down after downgrade of the entire group by Bank of America analysts. They're citing weaker demand, and higher interest rates certainly aren't good in the mortgage market, so that's an issue there for that group. And Apple, it's off about almost 4% today. Department of Justice lawyers are in the early stages of drafting an antitrust complaint against Apple. Now, that's according to Politico reports, citing an unidentified person with direct knowledge of the matter. So we're going to have more reporting on that coming up. But Apple down almost 4%.
I mean, no place to hide when the most valuable stock falls that much, Paul. But I'm looking at what's happening in terms of really where the mood music started. We were worried because it came from the ECB largely. We saw German borrowing costs rise. I'm starting on a cross-asset perspective on sovereign bonds here in Europe. We saw Italian yields up 16 basis points on the 5-year. Austrian, Belgium, Portuguese yields push higher as we think the ECB gets more hawkish. And then, of course, out comes Fed Chair Powell and just reiterates how much they're still focused on inflation. And talking about inflation, we did see Brent crude actually manage to lift. And it's surprising that oil managed to push higher in the face of that hawkish commentary and what that might do to the economy, in the face of a stronger US dollar. Steel down, iron ore was down a little bit here in US trading at least. And I'm looking at what happened in the foreign exchange market because indeed it is a sea of red versus the US dollar. It was King dollar up as we anticipate more rate hikes, and indeed a Kiwi dollar that weakens to the tune of 1.5%, Taylor.
The yield curve, Caroline, when you think about where we are within the U.S., yields on the front end rising a little bit, maybe 1 to 4 basis points on the curve. I think on the long end, Katie, and you and I have been talking a lot about this, down 5 basis points. Interesting comments I get from a lot of the bond investors, a few writing in saying that Powell today has sort of sealed the deal for this recession. When you take a look at 2s 10s, 2s 30s, still further inverted, on really signaling they're focused on inflation and that they will accept some pain on that labor front to get inflation back under control. I think Jim Bianco over at Bianco Research, of course, told me earlier that inflation affects everyone. A recession only affects those who lose their jobs. So if you're thinking about how to really tackle one of the broader problems, that is it. Of course, if you're one of those who loses your job in a recession, you might have a bone to pick. But I think sort of big picture, that's the narrative in terms of how we're thinking about this.
And it feels like Powell was really clear about that trade-off today, that they can't just fight inflation in isolation. That's going to come with some sacrifices in terms of economic growth. And I mean, to the point we've been making all afternoon, it feels like equity markets finally listened. I would argue that bond markets did too. I mean, if growth is going to slow and be below trend, makes sense that you'd want to be in long-dated treasuries.
Yeah, it does make a lot of sense. It's interesting that you guys talk about, as we focus in on inflation, of course, Jay Powell did, but we talked with Leo Kelly over at Verdant's Capital, and he said inflation will come down because of inflation. There's a point where we all are already seeing it, where people have to make some choices, and that will ultimately reduce some of the demand and bring down some of that price pressure. Paul?
Yeah, well, in honor of John Farrow, who does not like to quote the Dow Jones Industrials, that 1,008-point decline gets my attention. What also gets my attention for the Dow, volume. Volume was up 15% versus the last 30 days trading today. So the people, they came off the beaches, they came back from the pools, and they traded today.
Yeah, and they saw not a single Dow Jones member in the green, all 30 falling. And overall, Paul, I think we then kick it forward to what's happening next week. We look forward to a jobs market that perhaps starts to show that trade-off as soon as this Friday when we get the non-farm payrolls. But before that, we do get some further reads as to really where some of the individual stocks are going. We still get some consumer names. Think of Best Buy. They, of course, had to downgrade their outlook. What are they going to say as soon as next week?
Some strategic updates coming from some other consumer companies. I know that, Katie, we're going to be looking at maybe Tuesday or Wednesday in some of our triple take conversations as well. And perhaps maybe the divergence that we're seeing between how the consumer is feeling versus how corporations are feeling. Because we've gotten some comments that in some sectors, corporate IT spend feels really strong. But then you are hearing that maybe companies are pulling back in other ways. So I am really curious to hear about how that corporate IT spend holds up.
And sort of when you think about the differing sentiment between the corporations and the consumer, at a certain point you would think they have to merge, especially if some of those corporations are starting to do layoffs, for example. I mean, that's going to be felt at a consumer level. We've seen that consumer be very resilient thus far, but at a certain point, I mean, it's just a circle.
Well, then we go back to, speaking of circles, let's go back to that monthly jobs report, which we will all be talking about 1 week from now. It's expected to come in at 300,000. We're talking about non-farm versus 528,000 the month before. So what do we want to see as investors? What do investors want to see? Still a strong labor market that says, okay, maybe we're not headed towards recession, but not too strong that maybe the Fed can start to think about tapering off at some point, although I'm not going to use the word pivot, Paul.
I know. And this is a Fed that says it is data dependent. And we're going to get several data points between now and September. But boy, with the conviction that we heard from Fed Chairman Powell today, it's higher and it's higher for longer.
I don't know if you realized I hosted Real Yield today.
I've heard that.
We do rapid fire questions. Carol, at the end, I asked all the guests if we're going 50 or 75, and they said that jobs day will be the number, and if it comes in strong, this is a Fed that they have the ability to go 75.
Yep.
Front loading, again, really to pull forward some of those expectations.
Yeah, it gives the Fed a lot of room to be a lot more aggressive. Don't forget the U.S. Open starts here in the New York metro area. Paul, do you know about that?
I sure do.
That starts on
Wasn't,
Monday.
wasn't Serena Williams ringing the bell actually earlier today?
Was she?
I don't know. I saw that on Instagram. I have to double check.
We'll have to fact check.
But Serena Ventures, that's the place.
Yeah, and it may be her last one, right? In terms of her major tournament. She says that. All right, guys, have a great weekend, a safe weekend. That's a wrap for us on TV, radio, and YouTube. Our cross-platform coverage, Beyond the Bell. What a week it was. We will see you again, same time, same place on Monday.